This is Brad Harvey with Harvey Investment Management, and today we're going to talk about a 2022 market summary, or the year in review. 2022 certainly was very interesting on a lot of fronts. It was painful on a lot of fronts. We had an awful lot of turmoil going on in this country. A lot of it had to do with the stock market and the business culture, but I think at the end of the day, the real problem has to do with coming out of COVID. Obviously, COVID was a couple of years ago, but I don't think that COVID is completely in the rearview mirror. The hallmark of 2022, in my opinion, is inflation. We've talked about this quite a lot. We've been talking about it for more than a year. Inflation at the end of the day is just rising prices over time. That isn't necessarily a big problem. However, when we have reduced supply and the same demand, that causes inflation as well. And the federal government, one of their key levers that they can pull is interest rates. And did we see that change? In fact, interest rates, the 10-year Treasury yield in 2022 went up over 150%. That's right, over 150%. That yield at the beginning of the year was 1.512, and at the end of the year, it was 3.879. Now, I apologize for all the numbers that we're going to cover, but it is very important to understand what's going on from a numbers standpoint. The stock markets overall also had a very difficult year. Now, the Dow Jones Industrial Average was the bright spot. It was only down 8.78% for the year. If you go down the list and say, okay, who was the worst? From a stock market standpoint, that would be the NASDAQ. It was down 33%. Foreign assets were down 16.5%. Foreign small cap was down 22.42%. U.S. small cap was down 21.56%. And the S&P 500 was basically down 20%. Those are bad numbers. I don't care how you slice and dice it. Those are rough. What also is very interesting is that with the rise in interest rates, the sell-off in the stock market also coincided with a significant sell-off in the bond market. In fact, the long treasury yield, or the long treasury bonds for the year, posted a minus 32% in terms of valuation. Obviously, that's on the long end of the curve. So was there any place to hide? Well, if we look at commodities, typically commodities do fairly well during an inflationary cycle. For the year, commodities as a group were up 18%, so that's pretty good. Oil, over the same period of time, up 7.05. Now, gold, which has historically been a very good inflation hedge, was actually flat. It was down a little over 0.75%. So what does all of this mean? Well, the inflation number for the year has not been printed yet. It's probably going to be over 7%. We haven't seen anything like that in quite some time. It's going to be interesting to see how everything is digested with that. Earnings actually held up okay for the year. However, I think we've got some turmoil coming in earnings for the first part of 2023. So what does all of that mean? How do we look at this from an asset allocation standpoint? Well, if we're going to be trying to buy low, obviously the NASDAQ has been hit pretty hard. If we're trying to buy low, we also should be looking at long-dated bonds. However, if we continue to see rising interest rates, those asset classes might have a rough go, and they might be looking more to the third or fourth quarter before we see black numbers. Interestingly enough, that long Treasury index that I was talking about was actually negative for all 4 quarters in 2022. I think that's relatively unusual. We will see. So this is Brad Harvey with Harvey Investment Management, giving you the 2022 summary. Thank you.